Welcome to the Rigatoni Capital podcast. It is the morning of Thursday, March 19th, pre-market, and it is another somewhat cloudy day and cold day on Wall Street. I wanted to first start by saying that I gave in and I bought a microphone. I have a microphone that I could have been using, but you have to be like really close to it, I think. So I got one that I thought maybe you could be a little bit further away. So we're going to hopefully have that by tomorrow. So lastly, Rigatoni Capital is on Substack, and Rigatoni Capital will also send out a newsletter on Friday morning. Hopefully that will be of a podcast with 3 guests I'm having on the podcast tonight, but it will come out in the morning. So I'll probably substitute that in instead of me doing this daily thing when I talk to you face to face. So that will be tomorrow morning, and it will be themed around the energy space and the data centers and behind the meter energy and trying to get enough energy to fuel all these data centers for the future, right? So that's where are we going to come up with this type of energy? It doesn't seem very clear to me how we're going to get the energy to power the data centers for the next decade and even the next year. So I think that's what the discussion's supposed to be about. And then we'll also talk about oil and other specifics of natural gas and other energy aspects of the market and how the war in Iran is affecting that. And we can even talk Venezuela. Okay, guys. So VIX is trading slightly up. We had the market pull back yesterday. Hawkish Fed. I don't really know what other news you want to say other than the Iran war headlines. And I'm looking at WTI, seeing it pull back to 97. It kind of went upwards towards 100 again, and then I see it has rolled back. The VIX is pretty elevated again here, as you can see. And yeah, even the 2-year looks like it spiked here. Financials continue to look like crap. Financial stocks, that is, and 10 years at 430. So we've hit a new all-time high here. Not all-time high, geez, a prolonged, maybe a year-to-date high at least. I mean, we haven't seen this level, according to this, since August 2025 on the 10-year. Okay. So that has inflation fears, of course. The PPI came out yesterday. It was like pretty hot, right? So we have all that fun stuff going on, and in the meantime, the S&P is still not corrected, but I feel like it wants to correct, and I feel like it just wants to correct 10%. Okay, so S&P looks like it's kissing the 200-day. We can look at like something like the QQ. Whoops, we can look at something like the QQQ. QQQ is also kissing the 200-day, but definitely not below. I don't think it has pulled back 10%. The NASDAQ and the S&P hasn't pulled back 10%. And we can discuss gold, although I do not hold gold here at the Rigatoni Capital portfolio. But of course, gold is quietly pulling back pretty sharply. And it's funny how you hear it on the way up, but I'm not hearing gold pull back I'm not hearing it in the headlines as much as it pulls back. And then Bitcoin is below 70, which is quite frustrating for Bitcoin longs, including myself. But I'm not too worried about this all long term. What I'm trying to tell you is that I think like something like American Express, which is trading at $291 per share, I think the stock is cheap. But the problem is I'd feel so much more comfortable if the S&P was in a bear market or at least over 10% correction, because yeah, I would be investing in American Express. I just don't know how much more pain that the entire broader index is going to see. And I would imagine American Express is going to come down a little bit more with the broader index, but we don't know for sure. Look, if I had a ton of cash on the sideline, and this isn't financial advice because I'm not even buying American Express. I haven't decided to do it yet, but this is where I feel like I would feel comfortable buying something like this and holding on to it for the next decade or something. And that's a big bet. That's a big bet to have that kind of mindset that you're going to hold on to American Express for 10 years. I mean, you better and put a good chunk of your hard worked money into something like this. You better feel confident when you enter it. Excuse me. Every day in the morning, I have some kind of congestion. I don't get it. Micron Technology had reported last night, and I don't own Micron Technology. Of course, Micron's in the QQQ, of course, and it's a $500 billion market cap now. I think Micron is probably in the SMH. I mean, that's obvious, right? We can look at that, guys, actually, after this. So I guess I own it indirectly because it's become such a large company. But I think the big number here is that fiscal Q2 revenue hit 23.9 billion, and that's up 196% year over year. I'm going to repeat that. Micron Technology fiscal Q2 revenue 23.9 billion, record revenue, and that is up 196% year over year. Fiscal Q2 gross margins 75%, nearly doubled year over year. Fiscal Q2 non-GAAP EPS 12.20 record, up 682% year over year. So, what are the AI bubble guys going to say now? The problem is this a one-time thing? Like, is this only going to happen? Are you going to see SanDisk, Micron, Lam Research, SK Hynix, these memory type of players only see like these are the best times, and you're never going to see good times like this again? And the bulls would say, nope, this is an ongoing thing, and this is a stronger cycle than you think, a longer cycle than you think. I just don't know. This isn't my specialty, and I don't really have a strong opinion either way, other than I feel like you missed it if you're not owning these stocks already. I mean, I can't buy a chart that looks like Micron. I'm sorry, I just can't. And I hope it does well and stuff. I hope it does well for everybody's sake, but I just can't buy something that is up that much in such a quick period of time if you look at the chart. Now, NVIDIA had this similar shocking, jaw-dropping, holy crap earnings report. And that was back like what, in early 2023, like after ChatGPT came out. And it was pretty obvious that NVIDIA was doing something special here with the data centers. And you saw the big increase year over year like that. And it was like things have changed forever. Do you guys remember that first earnings report that NVIDIA did? And then NVIDIA probably had a chart that kind of looked like this, I'm guessing. I'm curious to know if they did. So, and I can go back and look at another time, but sometimes there are those type of, this is the beginning, this is the first inning, and this is, times will never be the same type of earnings report. I don't know if this is it, but when NVIDIA reported it, I knew it. And Oracle, when they report it, the backlog number, and remember what their stock did like not so long ago. You guys remember the big, this one, it must have been summer 2025. Do you guys recall? I still remember like listening to the earnings call and hearing about their large backlog number, and then look at how that worked out for them, right? So just be careful, and you gotta think like a value investor sometimes. It's okay to accept that you missed something. And again, like you can own the QQQ or you can own the SMH. Let's double check if what percentage of the microns in SMH. So it says they're about 7.2% of the entire SMH. Did you guys know that? Because I didn't. Yeah, I mean, it's not the same thing of owning the company itself directly, but definitely the SMH has been a winner, and you could probably sleep better at night. But I don't know how cyclical the semis are right now because of this data center build out. And I do think there are winners in here that are going to be fine throughout this long cycle. But semis are pretty cyclical. And we talked about the robots and the amount of chips that have to go in the robots. Remember we talked about that yesterday? Like the humanoids and stuff. And in the 2040s and the 2050s, and that makes it seem like this isn't as cyclical, but not all these chips are going to go inside robots and drones and autonomous vehicles. A lot of them should, of course, and the winners will, the that are in this in your top holdings. So sometimes the SMH is just a great play, you know, if you feel like you missed MU and you're frustrated. I mean, you should have exposure to SMH. It's the picks and shovels of the future. Always has been, even before ChatGPT and AI was a thing. Sergey on Substack, who I follow and subscribe to, his newsletter is called Compounding Your Wealth. And he always does a good job breaking down like tech stock earnings, mostly SaaS, but he is working on Micron this morning or last night. He said Micron delivers 75% gross margin, which we know we discussed that. And Micron's quarter stands out for one reason: margin expansion at scale. Okay, so their operating margin was at 68%. Their net margin was at 58%. That's crazy. Free cash flow margin hit 23%, up 24 PPS year over year. Growth is not the only story. Operating leverage is the story. AI demand is reshaping memory into a strategic bottleneck. Data center and cloud segments expanded aggressively, while HBM M4 ramp tied to next-gen platforms like NVIDIA Rubin is already underway. Structural shift is visible, more memory per workload, not just compute. So, yeah, I mean, I just missed the whole memory investment thesis. I just wasn't there. The ex-hockey player who has a hedge fund, he was there. He made a lot of money. So it says dilution remains modest at 1.7% year over year, not a major concern relative to earnings growth. Yeah, like if you don't want to see that, but of course it's not a big deal compared to how fast they're growing. It says valuation reflects some caution. Forward PE is around 10 times. EVs to sales ratio is 7.6 times. Despite record profitability, the stock declined 5% post earning. So what do you mean the forward P is around 10 times? Do you guys understand that? Do you guys understand that? Why would the forward P be only 10 times? What am I missing here? It says next 12 months forward P is 10 times. I'll have to stay in my lane here, guys, on Micron. I just don't follow the company. This podcast is forcing me to follow companies I wasn't following before, so that's really cool. But I need a little understanding on why it's trading at a forward multiple of only 10 and why it doesn't trade at a high multiple ever. It's not I'm just a little confused by the PE price. I just don't get it. So I'd have to look into that further and try to understand why it has a lower multiple compared to everything else I'm aware of. Okay, so very interesting stuff. And look, I hope you guys made money on this memory storage thing. I certainly have not. I missed it. Okay, and here's a photo, beautiful photo. If you guys can see it, hopefully you can, or my face is in the way, on how Micron had done this. There's a better way so you guys can see this. So this I want to go back. This is the quarterly earnings. It's showing you revenue, net income, free cash flow. But look at how this quarter changes everything. So it changes the world. $23 billion. Pretty crazy. Pretty crazy. And the stock, of course, it sells off because a lot of this was already built in. Investors already pumped up the stock like I'm crazy. That's why I'm very. You know what I think? I think some of these memory players don't trade at high multiples, and there's a reason for it. So, hey, if you're an expert on any of this stuff and you feel comfortable coming on the podcast, I would love to have you on. I have guests on all the time. Charlie Bolello says PPI in the U.S. rose 4.7% per year over the last 5 years and over 25% total. 2% inflation is a complete myth. The Fed should be hiking rates, not cutting. So, yeah, I think that's a good reminder that the cumulative PPI in the U.S. is 25% over the last 5 years. So let's pretend it's CPI just for the discussion, because it practically it practically is CPI. If you think about it, like I said, manufacturers pass on inflation. It's not like they're taking the hit for the most part. So think about that. If the cost of goods has gone up around 25% cumulatively, of course, if you didn't get a 25% raise, then you're feeling the crunch right now, right? And the only thing that I disagree with is I don't agree or disagree when people are adamant that the Fed should not be cutting. I definitely don't agree that the Fed should be hiking. That I don't agree with Charlie, and I agree with 99% of what Charlie says. And I definitely don't think the Fed should be hiking. If anything, I should think they should be cutting because I think they're in a lose-lose situation. So whatever the Fed does at this point is never it doesn't really matter. They have already lost, in my opinion. And I think that, long story short, like eventually they're just gonna have to print money. I mean, I think that's pretty obvious. I don't know if they're gonna print it this year, of course, but eventually. And Kevin Warsh is against increasing the federal balance sheet and liquidity and printing more money digitally and all that stuff. He doesn't want to do that, right? Or he doesn't want to do QE. He doesn't think that's right. But at some point, you have to do some type of money printing. And, it's unfortunate because that K shape can widen more, right? That's kind of like the result of it. And to be honest with you, that's kind of why I like American Express. It's home American Express stock, like I've been telling you guys every single day I come on the show, and why I'm interested in buying that stock. It's almost like a hedge against the K-shape problem we have here. And there's reasons why American Express has sold off, and a lot of that has to do with AI disruption, and no jobs have been added forever. It feels like at this point we have a job problem issue, and I'm actually going to play that right now. So this was Jerome Powell yesterday, and it should only take like 1 second. I'll play it for you guys.
What has been the trend job creation? The thing that I think good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. The thing,
Jerome Powell is trying his best, and I don't have anything against anybody personally. But the Federal Reserve, as it exists today, is almost like incompetent. The building and itself, like the actual bank itself, has become incompetent. It's really just for politics, in my opinion. And when we want the money printer to be working, we expect them to print. That's really what it has become. If it be right or wrong, that's the truth. And so it's nothing ever against the someone like Jerome Powell. I'm sure he's a good dude, but the system itself is incompetent. And that's probably why I'm like a Bitcoin fan, and why I find safety in Bitcoin. Like I see Bitcoin as a safe investment, even though it's the most volatile, violent, frustrating investment I've been in. I definitely feel more comfortable knowing that it exists, and it's almost like I can step out of this type of incompetency where they say they have a dual mandate and stuff like that. Do they have a dual mandate? Doesn't seem like they really care. People argue like, well, unemployment's at record lows. We're at what, 4.4%. So why would we ever cut rates? Because we have a very fragile system, a fragile economy. Our economy's fragile. Every day, we're always dodging like a new crisis problem. And I'm not going to give you all the examples of all the crises we've had in this economic system, but that's the result of like a system where the government is in $39 trillion of debt. We're always going to be one day away from a crisis, and that's because the money's no good here. The actual dollar that you go to buy stuff at the grocery store with, you think that's such a great thing, but that dollar is actually unhealthy and it's corrupt. And that's why people think Bitcoin's crypto and they hear that and then they're like, oh, that's like bullshit. But Bitcoin is separate. It's a separate entity than crypto. And I would recommend trying to learn about Bitcoin if you haven't. And completely disregard everything else, Ethereum, this, that. It's all distraction. It's all distraction to the one of the most important technologies ever invented, in my opinion, which is Bitcoin. Okay. A little bit of a rant there, huh? Professor Campbell wrote, this is what an air pocket in cash flow looks like. Say goodbye to buybacks for a couple of years, and it shows you the photo of the hyperscalers' estimated free cash flow for current and following calendar years, how it looks like a falling knife. Meta, Amazon, Google, Microsoft, Oracle. I'm going to go out on a limb here, guys. Love these stocks. I don't own Microsoft. I saw some writing on the wall late last year. I did sell my Microsoft stock, but I've been in Amazon for years. I don't own Google, and we're going to talk about Google for a minute. I do own Meta. I like Meta. Oracle, I have a small exposure to, and obviously it's been a tough ride. I'm actually not red on Oracle. I could be today for all I know, but I've kind of always, I bought it at a good price. Long story short, I own NVIDIA, Amazon, Apple is like my top holdings, and I've owned those stocks for many, many, many years. Since I've owned NVIDIA since 2017. Meta's more of a new position, and then Microsoft was the only hyperscaler I sold because I was a little concerned about the stock there for a while, and I sold it at like a 450% gain. So I'm going to have to pay a big tax bill. Even though it's a long-term capital gains tax, I'm going to have to pay that this year. So, and my timing was kind of lucky. And personally, I think Microsoft's going to be fine, but I think they have some kinks to work out first. I think the stock needs to see more of a pullback. So anyway, just wanted to show you this chart. This is nothing new. We already knew that. Long-term investors, super investors, hedge funds, the wealthy of the wealthy already know this story. So people that show this picture, it's kind of like old news now. Okay. Polymarket. We're excited to announce the Situation Room by Polymarket is coming to Washington, D.C., the world's first bar dedicated to monitoring the situation. Monitoring the situation. I can't say monitoring. Anyway, yeah, it's supposed to be like a sports. It's supposed to be like a DraftKings, by the way. I don't own DraftKings stock, but I have the sweater, the hoodie. I know there's a lot of great memes. My whole thought on this is that hey, it is kind of funny that they're opening it in Washington D.C. because the politicians don't like Polymarket. I guess they act like they don't. All right, this post was called "Hyperscalers and Hard Hats on Sherwood. If you build it, gains will come." So, construction firms are the best performing non-Iran related segment of the stock market this year. Why would they say non-Iran related? Oh, because like they think defense manufacturers did well? Really weird. Year-to-date price performance of select industry subgroups within the S&P. So anyway, the whole point is construction and engineering, and they talk about Comfort Systems USA and those type of stocks and water companies and any kind of construction and infrastructure that has to do with building out a data center is killing it right now. I understand that. The data center boom has boosted construction profitability, and it shows you a chart of how well Sterling Infrastructure and MCOR and Comfort are doing and all this stuff. Understand that. This is my concern, is what's going to happen when the data centers are built. You know, what I'm trying to say is like, is this a long-term investing thesis for you, or is this just a one-time trade? And something like if you own like a Caterpillar, you benefit from cyclical, but they're so diversified that they have a lot of cycles within cycles. Like Caterpillar, there's always a use for Caterpillar. And I personally don't own any of these stocks, and I'm not interested in this as an investing theme. I hope they all do well, but I'm concerned about these one-time things. But hey, I hope they do well. I mean, I don't know much about comfort systems and HVAC companies and stuff like that. I hope they all do great. I do. I know Carrier Global, which is an HVAC company down in Florida, headquartered in Florida. I mean, that's a great stock. I would look into it. I have looked into it. I don't own it, but like those type of businesses, at least you are familiar with the company and it's not just a data center play for you. You know what I mean? This time last year was March 19th. So I was writing posts on Substack and I wasn't like sending them out to news. At this time last year, I was writing posts on Substack and I was not sending them out to my subscribers via email. I was trying something, I was testing something out where I would just post it on Substack. And I mean, these posts are like I said the other day, they are so different compared to how I write today. It's night and day. It's night and day. It's scary to see how I used to write and it was just it's so different. This is what I was talking about. I was talking about regardless of what Powell said today. So he must had done a press conference, Powell, and he probably sounded hawkish, right? And the stocks were selling off because this was leading up to Liberation Day. So the tariff war had already started with China and everything. And stocks were selling off really hard. And I said, regardless of the tariff headlines or Powell's speech headlines, whether past or future, they had nothing to do with my execution in buying certain stocks on weakness. And here are some stocks I bought. I bought the QQQ, I bought Amazon, I bought Oracle, I bought AppLovin, I bought Spotify, and then some other restaurant names. And I said, only thing that really matters was the NVIDIA's GTC. And then I said, is Tesla dead? I had no clue. Don't pretend to know something you don't, because I don't follow Tesla that closely. Tesla was trading very poorly at that time. And I was trying to say, again, another theme I had discussed, I think a week before this, back in 2025, was enjoy your life and go outside and watch March Madness, which I believe starts today. And I have this theory that like when the Masters are on or when March Madness is on during the day, like the first week, it almost feels like less people are interested in the stock market. It's kind of like a breather. It's kind of like, not that you're gambling on the games. I'm sure many people are that trade stocks on Robinhood or whatever, or day trade, but it is kind of like a theory I have that I wouldn't be surprised if volume is a little bit less during the Masters or during March Madness, because it's the same type of person that the same retail investor also is interested in the sports that are played during market hours. Just a weird thesis I have. It's probably not even factually true. It's just a theory I have. I'm looking at Google, guys, because Alphabet, because I just think it's such an unbelievable company. And I'm so disappointed that I missed its epic run from May 2025. Its high, which was $350 a share. And then it has finally caught some breath and has pulled back. But I keeping my eye on this one because I feel like below 300, you have a lot of support. You have a lot of support from retail investors and stuff that think it's a buying opportunity. And it probably is. It's still trading at a okay forward multiple, even and below 300, but still like not a crazy expensive stock. So I think there is a good amount of investors that saw that they missed it, see Gemini doing so well, see YouTube growing so well, and want to buy the stock. And I understand that. You can find Rigatoni Capital on YouTube, by the way. And yeah, that's about it for me, guys. But congratulations to anyone long Micron. Don't be frustrated by this little pullback. Hopefully the stock you still have more gains there. And I'm sure when the macro backdrop is a little bit healthier, you'll see something like Micron do well, especially if that forward multiple of only 10 times is correct. Sergey is saying that's expensive. So I must be not understanding. He says valuation reflects some caution. Forward PE around 10 times. he's saying to be cautioned here. So I guess I don't know how to value these type of chip companies, and that's okay. I never have followed or done my research on Micron. It came out of the woodworks, right? But I'm going to learn. I'm going to try to figure it out what I'm missing there for sure, and we can talk it. We can talk about it next week. So yeah, I think we could see today. We could see a few scenarios play out in the stock market. Today's Thursday, March 19th. You could actually see like a little bit of a flush out where people throw in the towel and they sell and they get a little nervous. We could be entering that type of time frame, and that's why like I would say, what will American Express, for example, do in that situation? What will the XLF do in that situation? I don't think they're going to do that well because they're really holding in there here. There is a support. This is XLF chart I'm showing you. Let's look at Goldman Sachs I'm showing you. And then lastly, I'll show you Berkshire Hathaway because it's the largest holding of the XLF the last time I checked. Always is. Goldman Sachs did bounce, which I told everybody if I were a trader, I would have bought it. It really did a good job bouncing off the 200 day. And let's look at Berkshire Hathaway, which by the way is now buying back their shares. Not allegedly, they are buying back their shares. We just don't know how much. And we won't know that again for some time. So yeah, Berkshire Hathaway doesn't look good either. So yeah, I think we could see like a nice little pullback here. Maybe the S&P will finally correct, and we can all agree that maybe it was time after such a nice run since last April. So like seasonally, we must be in this kind of time frame. It's kind of like Trump's second year in his second term, and we do see some seasonality where you have a lot of volatility in the first few months. It might not have anything to do with this being an election year. So thank you guys so much for watching. Again, I'm going to have a microphone hopefully by tomorrow or Monday's show, so I sound a little bit more clear and try to get the editing a little bit better each day, try to understand what I'm doing wrong. And I want to come on here and talk to you guys pre-market about what I'm seeing in the headlines about long-term investing. It's not a show for traders. Thank you guys. Enjoy March Madness. Take care. Bye.